What is an early stage startup? Well, an early stage startup is simply a startup business venture that is early in its life cycle. Now, to qualify as a startup, it needs to be a growth-based venture. When we differentiate that from a mom and pop style business or a lifestyle business. So when we say startup, we mean a project type business where the objective is immediate and rapid growth. Okay, so with that being said, it's this type of business entity early in its life cycle. Now, if you are familiar with a concept called the J-curve, sometimes referred to as the S-curve, depicts the growth pattern that most startup ventures go through. Initially, you start out and you are losing money, you are spending money, there's very little, if any, revenue coming in. Type scenario, and there's no growth at that point. You're really just investing resources into the business. And then you hit a little mini trough, and then you head upwards to make that J shape. And that upward momentum is your growth path. So early in that growth path, you are considered a early stage startup venture. Okay, so just as soon as you begin to come out of that under trough there and begin to grow, most people refer to that as an early stage venture, and you remain in that area more or less until you've established yourself in the market, and usually until you've at least reached some level of quarter over quarter or month over month or whatever your operational cycle is, growth that meets the expectation. And at that point, you change from an early stage startup venture to a mature or growth-based startup where you're starting to reach the peak of your growth path. And this is normally after you've received seed stage funding and things like that. So any startup venture that's still in the seed stage or perhaps even early investment, perhaps an A round or first round after the C stage of funding, would all be considered an early stage startup. After that, you're generally considered a mature startup venture.